We are covering the alternative minimum tax, or AMT, for individuals. The exam tests your understanding of AMT as a completely separate, parallel tax system designed to ensure high-income taxpayers pay at least a minimum amount of tax. You will calculate tax liability under both the regular rules and the AMT rules, and the taxpayer pays whichever is higher. The entire calculation is done on Form 6251. An exam question might give you a taxpayer's regular taxable income and a list of specific deduction and income items, then ask you to calculate their tentative minimum tax. Let's use an example. A single taxpayer has a high income and a regular taxable income of $300,000. On their Schedule A, they deducted $35,000 in state and local taxes. For regular tax purposes, this is limited to $10,000, but for AMT purposes, the entire amount of state and local taxes is disallowed. You must add this back when calculating Alternative Minimum Taxable Income, or AMTI. This is a common exam trap. They may only give you the amount deducted, but you need to know it's a complete add-back of all state and local taxes paid. Another major adjustment involves incentive stock options, or ISOs. When a taxpayer exercises ISOs, the difference between the fair market value of the stock and the exercise price, known as the bargain element, is not taxed for regular purposes at exercise. However, for AMT, this bargain element is considered income in the year of exercise. The exam will give you the number of shares, the exercise price, and the market price on the exercise date, and you must calculate this adjustment to be added to AMTI. Once you have the AMTI by making these adjustments, you subtract the AMT exemption. For 2025, that exemption is a generous $88,100 for single filers and $137,000 for joint filers. But here's the catch. The exam loves to test. This exemption phases out for high-income earners. The phase-out begins when AMTI exceeds a certain threshold, and for every dollar over that threshold, the exemption is reduced by 25 cents. A question won't just ask for the exemption amount. It will give you a high AMTI and expect you to correctly calculate the reduced exemption. After applying any reduced exemption, you're left with the AMT base. You apply the AMT tax rates, which are primarily 26% and 28%, to find the tentative minimum tax. If this amount is higher than the taxpayer's regular tax liability, the difference is the AMT they must pay. To remember the key adjustments, think of the phrase, with AMT, you always add back the SIP of deductions. S stands for state and local taxes, I for the bargain element of incentive stock options, and P for interest from private activity bonds. These are some of the most tested items that you must add back to regular taxable income to arrive at AMTI. Finally, understand the AMT credit. When a taxpayer pays AMT due to deferral items like the exercise of an ISO, they generate a minimum tax credit. This credit can be carried forward indefinitely and used to reduce their regular tax liability in future years, but not below the tentative minimum tax for that year. The exam will test whether a credit is generated. Remember, exclusion items, like state tax deductions, do not generate a credit. Only deferral items do.